have Mahantesh Sabra joining in, who's an independent market analyst, and Rajesh Palvia, who's the head technical and derivatives research at Axis Securities. Welcome, gentlemen. So we would like to take a little bit of your view coming in. Rajesh, I'll come to you first. The kind of moves that we saw in the market, what is the picture that you're making of it as of now?
A very strong buying action across the board we have witnessed throughout the week, and broader market has clearly showing that this really can extend further as mid cap, small cap, and across the sector there is a buying interest. So looking at broader outlook, that we are still holding our bullish, and we believe that this rally can extend for Nifty. Possible target we can see in the continuation of this up move towards 22,700 to 22,750. So as if we analyze the call put concentration data also, the put writers are aggressive at 22,400, 22,500 strikes. So that really shows that base is now shifted higher, and 22,400 is likely to act as a support area for any kind of minor dip if we get in the market. So buy on dip should be your strategy. Keep your stop loss at around 22,350. Upside target we can see towards 22,750 to 22,800. For Bank Nifty, very strong buying action especially in today's session. HDFC Bank has shown very good traction. So looking at the overall bank stocks as well as the Bank Nifty setup, we are expecting that this rally can extend further as the put writers have shifted their base towards 48,200. So that is likely to act as a good support area for Bank Nifty until 48,200 is intact for Bank Nifty. Possible target we can see in the next week towards 48,900 to 49,000 also. So this rally can extend in the Bank Nifty also. So dips should be your strategy in Bank Nifty also.
I appreciate that view coming in, and I'm going to take that point a little bit further with Mahantesh. I'm going to come to you on banking, like Mr. Palvia spoke about, and help me understand the moves that we've been seeing when it comes to Nifty Bank, because even in Friday's trading session, Nifty Bank has outperformed all the other benchmark indices, at least up almost 1%. On the other hand, you have PSU banks also that are not doing so bad for themselves. In fact, they're doing pretty well for themselves. So help us understand, if one has to play this entire banking theme, where are you seeing comfort? It could be in terms of valuations, it could be in terms of just the momentum that you are penciling in ahead. Would it be large private sector banks? Are you playing this theme via public sector banks, PSU banks? What's your view?
For the comfort of the banking sector first, there is good growth that we are seeing on the top line for most banks. When I say top line, I mean credit growth. Deposit growth is quite good for most of the banks now, after having seen sluggish deposit growth towards the start of the last fiscal year. But then there is one worry that is cropping up now, that the banks have reached a bottom in terms of their asset quality. Bottom as in the asset quality has become, in terms of pure NPA, very low. There is an oncoming fear that the provision aspects of most of the banks will become now a little more accelerated. In fact, many of the banks will target higher provisioning and more provision coverage ratio ahead. Having said that, the other worry that we will see is that when the interest rate cycle starts turning, what typically will start happening is that the banks will be landing up with higher costs in terms of their deposit costs and lower lending rates, and therefore there could be a margin squeeze which we will see towards the later part of the fiscal year. From a valuation perspective, I'm not too comfortable with the banking sector right now, because we haven't reached the fag end of the fiscal year. Now is the time that the banks will start tightening up, and the valuations will start showing up in terms of lower numbers. They will perhaps reach a situation where you will find the banking sector performance will lag expectations, and therefore there could be a valuation dip. Now, within the banking space, what to look for is potentially a hunt for the smaller private banks, or perhaps the smaller PSUs, because many of these smaller PSUs and smaller private banks have yet to see their asset quality go down. They are in a cycle which follows a little later, and they are quite late in terms they are asset quality improvement process. So that's where we can get comfort. That is smaller private banks or smaller public sector banks.
Right. Thanks, Mahantesh, for wrapping that up pretty well. Thanks, Mahantesh, for wrapping that up pretty well. And that really just wraps it up and tells us what we should be looking out for when it comes to banks then. But tell you what, let's take a quick break then. And when we come back, we'll take a look at what else happened this week and tell you which cues you should have on your radar for the next week as well.
Hi there, welcome back, and thanks so much for staying tuned to Your Trades. You're watching ET now. Let's have our guests back into the conversation and let's keep it going. We're trying to understand and make sense of the moves that we saw in the market over the course of the week and what to look out for, what to look ahead for when it comes to next week's trading session. Gentlemen, I'm going to come back to you. Let's keep the ball rolling with this discussion. And Rajesh, let me come to you now and talk to us a little bit about the earnings preview that you are expecting for Q4 to kick in, because come 12th of April next week, TCS will be kicking off its earnings. We've seen some volatile moves coming in on IT over the course of the week as well. So give us an overall view on what you think Q4 earnings are going to look like across the pack, and also tell us a little bit about how you are playing IT pack right now.
So I think most of the large cap IT stocks are consolidating in narrow range, and looking at the behavior of these stocks ahead of earnings, a little more little bit of cautious approach participants are taking at this juncture. Though if we analyze the overall structure for most of the large cap IT stocks, the TCS is well poised, and looking at the overall short to medium term structure, we believe that till TCS is holding about 3900 kind of zone, there is a high possibility that TCS may exhibit upward momentum towards 1400 kind of zone. That's the target we are projecting for TCS at this juncture. But Infosys is looking a little weak on the near term as well as on the short term chart, as stock has slipped below to its 100-day moving average. So if it continues to trade below 1520, 1500 mark, then possible downside we can see in Infosys towards 1450. That level we can see. If we analyze another stocks from IT pack, that is HCL Tech and Wipro. So HCL Tech is looking bullish, though there was some corrective move in near term, but overall long term structure is bullish for HCL Tech, and if stocks continues to hold above 1500 mark, then possible pullback we can see in HCL towards 1600 to 1630. So TCS and HCL Tech is our preferred choice at this moment based on the technical parameter. Infosys is looking slightly weak at this moment.
That's the outlook coming in for the IT majors, and let's see how that pans out for them. But Mahantesh, I'm going to come to you, and oil has been really on the boil. We've seen quite the moves coming in for oil this week. So given all of that, how are you putting that into perspective for oil explorers likes of ONGC, Oil India, or even crude sensitive companies on account of input costs going higher?
I think what is more important to recognize here is that the oil sensitive companies, those who are exposed to either crude oil directly or crude oil derivatives, would find it a little difficult going ahead to really pass on the differences that they will see on the input side. But fortunately, many of these companies would have be sitting on good amount of inventory, which is at low cost. So for the immediate quarter or so, or probably 2 quarters, they would perhaps see margins expanding a little bit because of the low inventory, low cost inventories that they would have. But as soon as we turn into the monsoon period, we should be finding it difficult for them to really raise their margins or even their output, because what typically then follows is your demand is a little weak, seasonally very weak, and you're now started with higher cost inventory. So I would rather be a little cautious on them. And as far as oil producing companies in India is concerned, they are a non-entity now. ONGC is not a stock which is on the radar of many of the investors in India. And quite frankly, the other oil producing companies are clearly off the radar. If you take the oil marketing companies, then perhaps, like I said, they would stand to gain temporarily because of this phenomenon related to the lower cost inventory, and fortunately, with the elections ongoing, they will not see forced reduction in prices or those types. So the volatility on the price front will at least temporarily be halted, and that should spell good amount of good news for many of these oil marketing companies. The other, particularly chemicals, fertilizers, to even some pharmaceutical companies, this uptick in oil could potentially damage margins ahead.
All right, Mantesh, thanks for that view coming in. But while we're talking about oil, we've also seen quite the surge come in terms of oil prices, crude prices. WTI has crossed 85, Brent has crossed 90, and crude prices could hover around $90 per barrel mark by year end, says FGE founder and chair Dr. Faridun Fisharaki in an exclusive chat with ET Now. But he expects prices to stabilize by next year. Let's go across and listen into this exclusive conversation we had with him over the course of the week on what to expect when it comes to oil prices. Listen in.
So we're looking at the prices $90 to $95 a barrel by the end of this year. And next year, maybe a little bit lower, $75, $85. And medium term, the demand growth continues to grow. Maybe 6 million barrels per day more demand is there to be achieved before we reach a peak in the early 2030s. And after we reach a peak, it will be very flat demand. It's not going to collapse by any means. So these ideas that somehow the renewable energy will come in and because of carbon issues, the demand will collapse, is certainly not true. Everybody promised carbon neutral by 2050. That cannot be achieved. I think India's 2070 is much more reasonable and achievable than many of the 2050 stories. So basically, oil demand will peak and flatten and begin to come down. But by 2045, 2050, our demand is about the same as this year.
All right, that's the word coming in from Dr. Fisharaki, but let's move on then and let's get Rajesh on board. Rajesh, tell us a little bit about which are the stocks where you're seeing value emerging then?
So three stock ideas which we feel that could give furthermore upside momentum in coming week. First stock is from banking space, that is IDFC First Bank. A stock managed to give breakout on daily chart of its falling trend line. There was long built up setup in derivative data. Stock managed to regain above its 100-day moving average. So the kind of buying interest throughout the week which we have witnessed in IDFC First Bank, that clearly shows that this momentum can extend further. One can buy IDFC First Bank for upside target of 87 to 88. Keep your stop loss at around 78 rupees. The second stock is from real estate space, that is Godrej Property. In today's session, short covering was there. Stock is now approaching towards its multiple supply zone. Looking at the overall structure for real estate space, we believe that Godrej Property may continue further more upside. There could be outperformance. So one can buy this stock. Stop loss of 2475. Upside target we are projecting towards 2600. And the third stock is from the defense space, that is Bharat Electronics. Now stock is again a move back to its all-time high trajectory. Looking at the buying interest throughout the day, that clearly shows that BL may continue its up move. 235 could be the possible target in the near term. So one can buy BL with stop loss of 220.
All right, thanks Rajesh for sharing with us your top picks for the next trading session. But gentlemen, with that, we'll have to let you go. So Mahantesh, Rajesh, thanks so much for taking the time out and joining us for this week's special Your Trades edition. Reviewers, with that, we're completely timed out on this special edition of Your Trades. Thanks so much for watching. You stay tuned to ET Now for more news and updates.